an increase of 44,000. But economists say much of that spike is seasonal, happens around the holidays. Meanwhile, the number of people still collecting unemployment benefits actually fell, suggesting some workers are finding jobs or moving through the system faster than expected. Job openings remain strong at 7.67 million, and the Fed just cut rates by 25 basis points yesterday, while raising its GDP growth forecast for next year. To break it down, let's welcome Ted Thatcher, president of Bright Lake Wealth Management. Ted, good to have you back. So the full jobs numbers, the November jobs report is delayed until, next Tuesday because of the government shutdown. But what do these early signals tell you about the labor market?
Alicia, it tells us that we finally have some clarity and some good data points. So much of the last several months has been murky because of the shutdown. But also, it's been giving us a lot of back and forth numbers. You've seen and heard about the Fed members bickering amongst each other about what data they should be keying in on. And the truth is we have a whole slew of really positive economic data here. And I think that it's worth highlighting. I mean, seeing a lot of the goals achieved here in terms of inflation coming down, the projections coming down, growth, actually projections, like you noted, for 2026 going up, combined with those other job data points, it really spells, I think, a lot of stability. So much of this year in the markets has been actually quite volatile. And so to see a lot of those positive data points tells me that as we round the corner in 2025 here in the final, trading days, as it were, that hopefully we won't see all that volatility that's been so familiar.
Okay, so let's talk about the Fed. They just cut interest rates by 25 basis points yesterday. And then I also want to highlight how they raised their GDP growth forecast for 2026. And they cited stronger consumer spending, trade improvements, narrower trade deficits, that's a big one, and a resilient labor market. So inflation is moderating at just under 3% on average this year. Remember when it was over 9% just a few years ago? But, according to polls, Americans still don't feel like life is more affordable. So why is the Fed more optimistic about the future when everyday Americans really just don't feel it yet?
Well, they're looking at a number of different things, right? Consumers are always going to be looking, of course, first at their pockets, and it does take time for all those things to work through the system. I think it's going to take, really seeing that inflation maybe come down even a little bit further for consumers to start to feel that. But we will actually see a lot more data, too. Like we said, there was basically a whole couple months, almost a month and a half, where we were essentially flying blind with this data. Next Friday, we're going to start to see a lot more. We're going to see that updated PCE. We're going to get an updated consumer sentiment estimate. And so as we get some of that more clarity too, I think that will enlighten the fuller picture of the story, because so many of these things do actually affect one another.
Right. And looking into the future, we also have some of the biggest tax cuts coming our way, so bigger tax refunds. And then we also have wages on the rise as well. So keep hope alive, right? Looking forward to 2026. Yeah. Ted Thatcher, president of Bright Lake Wealth Management. Appreciate your time today, as always.